Is it on? Yep, perfect. I guess my question is, it's a bit self-serving, but also just listening to your question, you guys are focusing on Edmonton, and you have folks in the room that aren't exactly particularly interested in Edmonton, it sounds like, but maybe this question might entice them or might be a part of that. So I'll get to it. My question is, if knowing what you know now, if you were to be a new investor looking at the Edmonton area, what would you focus on, or what would you be looking for? I know a lot of it's part of analyzing deals and stuff like that, but if you were, quote unquote, setting up shop from the start, where would you focus on? What would you be looking into?
Are you talking asset types or areas or strategies?
Yes.
All of the above.
Okay, I have a follow-up question because I want this. I don't want it just to be generic. I want you to get the most value out of this because I hope that my answer provides you enough value that you can actually go and do it. You know what I mean? I don't want you just to add more information to your head. You got enough information up there. So what are your goals?
Buy and hold.
Buy and hold.
Long-term buy and hold appreciation.
Do you have kids?
We have one, yeah.
Yeah. How old?
13.
Awesome. That's great. Is it for them or is it for you?
At this point, it's for us, but we'll see where it goes, right?
Okay, so buy and hold makes sense. Yeah. And one property, two properties? Like, do you just plan on buying one for the kid and then paying it off in full and letting them have it or are you planning on scaling?
Scaling is a thought, but I mean, dip a toe before I throw myself in kind of thing, right?
So you don't need cash flow right now so much. I'm not saying don't invest. I'm not saying invest without cash flow. I'm just saying cash flow isn't the huge priority right now.
No, it's not the driver. It's got to make sense from a risk perspective, but it's not the driver.
Risk and equity growth over time.
Good answer.
Okay, go ahead.
I think he was hoping for you to answer.
Why? Oh, you're the systems lady. Okay, so for those of you guys that don't know Gabby is the systems gal. So she's the one that does everything. I don't do anything. I'm just the one that gets to answer the questions, the coaching, and then also my expertise is in creative strategies, which for some of you guys are going to be in that breakout room this afternoon. We'll be talking about creative strategies. Also in market analysis and deal analysis. So yeah, I guess I can handle this one.
Yeah.
Why couldn't you ask about systems or like property
or tenants.
management?
You could have asked about tenants.
I can take it back if you want. You know, we can review it.
He needs to figure out the macro before he dives into the micro, the systems, the
Once
tenants.
he gets the property,
he'll
be booking a coaching call with you.
Yeah. I got you.
So I teach 5 fundamentals, which I don't have time for the 45-minute presentation. I've got
30 minutes.
30 minutes left, and I still got to give away some cool prizes. There's 5 fundamentals, and then the 5 fundamentals basically make sure that you buy the right property that will last. Then we have the cash flow test, which I'm sure you're familiar with. You've read the book, The 5% Rule. Go look it up on Amazon. That right there teaches you all about how much cash flow do you need in order to make sure that you have a sufficient amount of cash flow to cover your risks, okay? So without being able to teach all that, it's a little bit difficult, but I know that you listen to the podcast on a regular basis. My recommendation is to look at entry-level properties, pay close attention here in the next year to 2 years, where the home buyers are going to be buying, where the big demand is for first-time home buyers to be coming into the market, because that's where we're going to see the most appreciation, right? We don't bank on appreciation, but if you look at the 3 different profit centers that we can make money in with real estate investing, cash flow, mortgage pay down, and appreciation, over the long term, you will notice appreciation will be the largest one. It won't be the biggest in the short term, so we do want appreciation, but we don't want to bank on it. So what I'd like you to do is pay close attention to where the demand is going to be, and the biggest demand is always going to be where first-time home buyers are looking. It's not just where investors are buying, because investors make up a very small fraction of the buyer pool with the residential real estate. It's home buyers. So if you can find what home buyers want and where the demand is going to be, that's where the biggest competition is going to be. More offers means more over asking offers, which means rising prices. Okay, so remember that. Figure out what that is. If you want, you can come to the table afterwards. I can point you on the map of what that looks like. Additionally, like I said earlier, we can't bank on appreciation. It might not happen. There's no guarantee for it, right? So whatever you buy, you want to make sure that it still meets the 5 fundamentals that I was referring to earlier, which I'll share them in a minute. You got to make sure that regardless of whether the value of the property goes up or it goes down, that you can hold that property for the long term. So you need to make sure that it has good, strong cash flow. You guys have read the book. As long as you follow that cash flow test, you'll be fine. As long as you got that nice big cushion, regardless of what happens in the market, you can hold that property. It might not go up in value in the next couple of years, but if you hold it for 20 years, I think we can safely say that it will go up in value and you'll make money. I want to make sure that whatever property you buy, you don't lose money on. There's literally no reason to lose money in real estate if you buy it right? You got to know the types of properties that have the highest potential for growth, but also the ones that will last in the event that it doesn't, or in the event that Trump comes and annexes our country and whatever, you know what I mean? Like, there's lots of things that can happen. Interest rates, they're talking about interest rates coming down, but they could go up, right? There's a lot of things that are outside of our control. So buy the types of properties that have the highest potential for growth, obviously, but the ones that can weather it even if it doesn't, right? You want to make sure you're going to make money regardless. The 5 fundamentals: cash flow, okay? You want a good tenant profile. You want tenants who are going to stay for a long time. They're going to take good care of the property, that can afford it, right? They have good paying jobs. They're going to stay for a long time. It needs to make money regardless of whether it appreciates or not. So you want to make sure that it has that as well. Landlord and tenant laws.
It's 8 a.m. It's all good.
You put me on the spot. Landlord and tenant laws. It has to have good landlord and tenant laws, okay? And the 5th one? Why am I brain dead?
Potential for appreciation.
Potential for appreciation. Has to have growth potential as well. If it meets all 5 of those, it checks. As long as it passes the cash flow test as well, it's good. So there are lots of properties in Edmonton, but there are also very few properties. I was talking with someone about this last night.
Yeah, just about, well, I don't know what conversation you had with somebody last night, but I think I know where you're going. I wasn't listening, but I think I know where you're going with it, that, the city of Edmonton, there's lots of properties. You can go on the MLS and scroll through thousands and thousands of properties, but how many of those actually will function as all the fundamentals rental
Bingo.
property?
Yeah, that's
right?
exactly what I'm kind of learning is
It's
that.
a very
So you're looking at
small-
properties, you're like, I can't find anything. It doesn't work. Doesn't work. Doesn't work. Doesn't work. Doesn't work. Doesn't work. You're absolutely right. It's
Yeah.
because very few properties do. And the thing is, you got to learn where they are. And everyone says, oh, Edmonton's amazing. It's got great cash flow and stuff. And then people come here and they take a program, whichever else, and then they start looking. They're like, where are they? It's because they're in small little pockets. I had a great conversation with Josh last night and Dave, 2 of our students in our mentorship program. Yeah. And they were saying the same thing. And I'm like, no, they're right there. And he's like, that's not many. And I go, I know. That's why I don't share them on stage. I'm sorry, guys. That's why I don't talk about them on the podcast. It's like, because there's so few, and I have to be super cautious of this, because like if I did tell the whole world, then everybody would jump on it, and then Edmonton would have nothing. I know it sounds really bad that I'm like kind of gating it a little bit, but there's not many. But I also want you guys to understand that is that like there really aren't many, and that should inspire you to get off your ass and go buy them as quickly as, figure out where they are and go buy them as quickly as possible, because that window is closing on Edmonton. My personal belief, I think that in the next 5 years, I don't think Edmonton's going to be the city that everybody's been saying it's been for the last 10 years.